Hi friends, this is Jayotha and I welcome you to this presentation number 6, or I should say tax saving strategy number 6, where I'm going to talk about maximize your RESP. Now RESP applies to those folks who live in Canada. You might have a similar program for your own country, and the message which I'm sharing over here might apply to you, but it might be a little different for you, or it may not be there. It all depends upon your country's taxation system. So this is part of our tax saving tips for better retirement series, and this information and this presentation is brought to you by retirementtransformation.com. This is a standard disclaimer. Pause the video if you want to read that. Now, these are the top 10 tax saving strategies I have already shared with you in one video where I talked about that these are the top 10 which anyone can apply in any country. But what I'm sharing here are some specific to Canadian ones because I live in Canada, and that's the reason why the second strategy, as you can see, is pretty much Canadian based strategy, but it's a similar one you have in the US. If you live in the US, it's a 401k, and might be different for if you live in any other country. But the concept does apply no matter where you live. So today, another Canadian special I'm going to share here, and that's the strategy number 6: maximize your RESP contribution if you live in Canada. So let's talk about what is RESP. Well, first of all, RESP stands for Registered Education Savings Plan. So RESPs were created by the federal government to encourage Canadians to save money for a child's higher education while offering certain tax benefits. So I'm sure you would agree with me that the cost of a post-secondary education continues to rise. Wherever you live, doesn't matter, it's going up, and it could be a real strain on your pocket if you don't have a kind of a savings plan in place like what we have here in Canada, which you can start immediately as as your kid comes to this world. And basically what you need to know here is that you can make the contribution of up to $4,000, which can be made for each beneficiary every year, and there's a lifetime cap which is $42,000. So there are two types of RESPs. First is the single plan, and under a single beneficiary plan, the subscriber, and also sometimes called as contributor, can name only one beneficiary. Now this beneficiary named does not have to be related to the subscriber by blood or adoption, which means that anyone can start a plan for a child and make regular contributions. The family plan is it's a family beneficiary plan, is similar to a single beneficiary plan, except that the subscriber can name more than one beneficiary to the plan, provided they are all related to the subscriber by blood or adoption. So the family plan provides the flexibility of sharing the assets within the RESP among the beneficiaries. So for example, let's say you have 4 children named as beneficiaries and only 2 pursue post-secondary education. Well, the RESP funds may be transferred to those 2 children within the plan without any kind of penalty. So what are the real benefits of RESP? Well, first of all, you're saving forcibly, and that saving can start from the year 1 of your kids' coming to this world. And one of the most important ones is here, the contribution made to an RESP are eligible to receive a grant from the federal government. Now that grant is called Canada Education Savings Grant. Some people also call it CESG. That provides RESP account holders with a grant of up to 20% on the first $2,000 contributed to the plan every year for each beneficiary under the age of 18. So if you really do the maths, that works out to a maximum annual grant of $400 per beneficiary for a total lifetime grant of $7,200. Well, some people might say, you know what else? Well, there is something else, and that's basically, there's also an additional CES grant, which is based on income. With an income less than $35,000, an additional 20% income of the first 500 in contributions per year is given. So it's a little bit more detailed actually, and I would encourage you to go to your bank and check it out rather than me talking about all of that. So what's the other benefit? Well, the other benefit is the benefit of tax deferral. Well, this means that while contributions to RESPs are really not tax deductible for the contributor. So if I'm making contribution for my son's name, I don't get any tax benefit, but income earned on the RESP investments remains tax deferred until withdrawn by my son. So withdrawals by the beneficiary are taxed in the beneficiary's hand. So if my son has very low income, while he's pursuing his post-secondary, or he has no income, so imagine, the tax on that could be almost nothing. So that's the benefit here. Now, certain restrictions do apply to a beneficiary aged 16 or 17. It's okay if it's 18 or up. And also you have to keep in mind that CESGs are linked to individual beneficiaries. So in a family plan, a maximum of $7,200 per beneficiary can be paid out in CESG. I hope that's really enough here as far as RESP explanation is concerned. But there's one thing I just want to share with you, and sometimes it can be a hit for those who really don't know about that if there is age difference between children, and I'm talking about significant age difference between your children, you may want to consider separate RESPs to avoid the risk of the family plan having to be wound up before the youngest child has completed his or her education. Well, I don't want to talk more than that because RESP is a very favorite subject of mine. I can keep talking about, but that's not the intent here. The intent is just to give you a little bit of information so that you can follow the path and get the benefit. So you saw that you can gain the benefit, and at the same time your beneficiaries, your child can save taxes while they take out money, because I'm sure they would be in the lower tax bracket in any case. So and this is my favorite way of saying is forcibly you're saving for your child, and I think that's the best thing to say. So you saw that tip, easy to do, and anybody can do it, and as long as you live in Canada and as long as you're eligible to get the RESP grant here. So tips like this can make the big difference. And here's one of the most important tips I would say for you, for your life, is that do you have a plan in place for your retirement? The answer you may say yes, or you may say not really, but that's fine, because the real power lies in, if you don't have one, that take the action, make the commitment, and do it. And anyone can do it. You can do it because you can follow our simple to follow process, and you can do one for yourself. So if you don't have one and you want better retirement plan, well, plan for your retirement logically with retirement wheel planning process. And that could be your first step towards a better retirement. So if you want to know more about the retirement planning and you really want all kind of free tips, then go to retirementtransformation.com/blog. What's important is take action now. If you keep it for later, it would never happen. And keep visiting this blog again and again, because there is so much of information being shared over there for everyone's benefit that I'm sure you want to take the benefit and you want to share about this website with others so that they can also get the benefit. With that, I want to say thank you very much for watching this video, and don't forget to watch the next video on another